Assalamu alaikum. This is Mohammed Zain Labdeen. Let's talk about something practical today. Uh, if you're working in banking or finance in Pakistan, you have definitely heard about Islamic banking. But what are the actual rules and terms behind it? I'm going to explain the seven core concepts that every single banker should understand. We'll look at what they mean, why they matter, and even I show you like I will explain a simple example of how the profit works in some of them, right? So first we have the first term is riba, the foundation rule, right? So the very first and most important rule in Islamic finance is the prohibition of riba, right? Riba simply means any excess charged on a loan. We understand it as interest. Actually, this isn't a modern opinion, right? It's a clear command in the Quran as well. The Quran states in Surah Baqarah, verse number 275, verse number 275, Allah has permitted trade and has forbidden riba. What does this mean for banking? It changes everything. We cannot simply lend money to earn more money. We need a different basis for every transaction, right? In now we have second term, which is Murabaha, the everyday product. This is the most common product you will see. Murabaha basically is a cost plus sale. Let me give you a real example, right? Imagine a customer needs to buy a car for rupees 2 million. In Murabaha transaction, the bank buys that car for 2 million, then the bank sells it to the customer for, let's say, rupees 2.2 million to be paid in installments over 2 years, right? Why is this not riba? Because the bank took ownership of the car, it bore the risk between buying and selling. The profit is from a trade, not from a loan, right? Third term, we have Mudarabah, the profit-sharing partnership. Think of this as a financial partnership, right? Mudarabah works like this, like one part provides 100% of the capital, that's the bank or investor. The other part provides the business expertise, right? And management, that's the entrepreneur. The agree to share profits may be 70% the investor and 30% to the manager. But if there is a loss, the financial loss is borne only by the capital provider, right? The manager loses their effort and time. This is the model used for all, like most Islamic savings and investment accounts, right? Fourth, we have the fourth term, we have Musharakah, the joint venture, right? This is like a full partnership. In Musharakah, all partners contribute capital and effort. Profits are shared based on a pre-agreed ratio, but losses are shared strictly in proportion to how much the capital each person invested. For example, you and I started business, right? You invested 800,000, 80%. I invest rupees 200,000, 20%. We agreed to split profit 50% because I am managing it full time. But if we lost rupees 100,000 rupees, so you bear rupees 80% and I'll bear 20%. Like you will bear 80,000, I will bear 20,000. This is the risk sharing. This is a true risk sharing, right? It's considered the ideal form of Islamic financing for projects, right? Fifth term, we have Ijara. Ijara, the Islamic lease. This one is basically straightforward. Ijara is leasing. The bank buys an asset like a house, a machine, or a vehicle, and leases it to a customer for a fixed monthly rental. Right. The key difference from a conventional lease: the bank, as the owner, carries the risk of ownership, like major repairs or insurance. This model is widely used for home financing and equipment leasing, right? Sixth term, we have Sukuk, the investment certificate, right? The bond, often called Islamic bonds, right? So Sukuk are actually certificates of ownership. When you buy a Sukuk, you are not lending money to a company. Instead, you own a share of a specific underlying asset, right? Like a building or a project, and you earn a share of its profits or rent, right? It's a way of governments and companies to raise funds without dealing in interest, right? Seventh term, we have takaful, the mutual protection, right? This Islamic insurance, the kafil, is based on the principle of mutual cooperation and shared responsibility. A group of people contribute money into a common fund to guarantee each other against specific losses. It's basically structured as a cooperative, not a profit-making insurance company. The Quran encouraged this cooperation, Surah Ma'idah, verse number 2, and cooperate in righteous and rightness and piety. Actually, these 7 concepts show us the blueprint of Islamic banking, right? It replaces interest, riba, with trade profit, murabaha. It replaces pure lending with partnership, mudarabah and musharakah, and it builds everything on real assets and ethical cooperation, right? Ijara, sukuk, and takaful. Understanding these isn't just about rules, it's about a completely different relationship between finance and the real economy. I hope that it was clear and helpful. What term would you like me to explain in more detail next time? Let me know in the comments. Allah Hafiz.